Hello, everybody. As Stacy said, my name is Crystal Schultz. I'm a senior manager here at Eide on our state and local tax team. I specialize primarily in sales and use tax. I've been doing that for more than 20 years. And a little bit of background, but don't hold it against me. I started out as a Wisconsin Department of Revenue auditor. So that's where I had my foundation, and then realized maybe where there were some holes that businesses weren't supporting exemptions that they were allowed as well as they should have been. So once I was no longer an auditor and I was on the brighter side of things, I developed this utility study and am still going strong with it as far as helping manufacturing and ag clients, what we'll be talking about today, specifically where they can recognize that savings opportunity and put some more money back in your monthly cash flow if you're eligible. So it's definitely something you don't want to be missing out on if you qualify. So we'll run through some of those qualifiers for the utility sales tax exemption. And as it says here too, there are sales tax refund opportunities that go along with it. So first off, as I alluded to, who qualifies? Manufacturers and the ag industry in different various businesses qualify across 30 states or so. Manufacturers are about 30 states that are eligible. The ag industry is probably closer to about 20 of those states. And what is it? What it is every month you're getting that electricity bill, you're getting that gas or that propane bill, and there's sales tax on it, most likely, unless you're in a state that may not tax it statutorily. But majority of the states are taxing that. However, you as an ag or manufacturer, you have an opportunity to have a sales tax exemption if you're in one of these 30 states. What that means is based on the electricity or gas used directly in your manufacturing process, you could be eligible to not be paying sales tax on that. Some states, all you need to do is get over a certain threshold and your entire bill would be exempted from sales tax. So again, it varies by state, but it is definitely a significant refund opportunity if it's something that you're currently paying tax on. And which states qualify? That's the big question, right? So out on our Eide website, which will be linked as well, I believe, into the handout, if you search utility studies out on our Eide website, this map will come up along with some additional information. It is interactive. All of the yellow states have opportunity. Now, all of the yellow states, if you counted them, there'd be the 30. Those are all manufacturing for sure. Again, about 20 of those show as ag as well. And then also, when you look at the state, if you hover over it, and this is just a screenshot example, so it's not interactive, but if you're on the website, it will not only show the state, but it will also show the refund period, which is the lookback period. You're allowed, specific to Tennessee, 36 months to go back and claim a refund for overpaid sales tax. And then also, once we recognize that opportunity, you'd start saving on a go-forward monthly basis right directly on your utility bills. Tennessee, as you'll see, has manufacturing available, and then they also have residential living, which is tomorrow's roundtable discussion, ironically. But of that, as you hover, if you hovered over Minnesota or Wisconsin, you would see agriculture also listed as an eligible industry. So what do we need to do to see if there's an opportunity that would exist? Ultimately, what you would need to do is just send in 1 month of your utility bills, and that could be electric, gas, propane. We focused primarily on electricity and gas, but even some states exempt water as well. So if they're used in your production process, if those items are, there's an opportunity for a sales tax exemption. We can identify that by looking at the 1 month of utility bills. We match it to make sure you're in an eligible state. We match it to see what the state uses as qualifiers, because again, every state is different. And then we can go forward with some additional discussion on that. Oops. So here, as your business, when should you consider if a sales tax exemption is applicable? Well, the first box, if you're uncertain, you definitely should be reaching out. If you're uncertain if you're currently doing it, if you're uncertain if you're eligible, reach out and ask the question. All we can do is take a look at it, and then we can have that further discussion. If you're in a state that maybe was blue on the map, it would still open the door for that discussion and maybe some additional opportunities depending on the state. So if you're uncertain, please feel free to reach out. If you take a look right now, or you're thinking, gosh, I've never looked at this before, and you pull up your electricity bill and your manufacturer in Minnesota, let's say, and you see that you're being taxed at 100%, send that over. Let's have a discussion, because you're certainly eligible as a manufacturer in Minnesota or any of these yellow states. So we definitely want to take a look at that, not only on a go forward, as I said, but also as an opportunity to go backwards. And the states vary as far as that look back period. You'll see as you hover across the various states, the average is 3 to 4 years. However, Missouri currently has a 10-year look back period. So if you're a manufacturer in Missouri specifically, or if you're an ag in Missouri, you have a 10-year opportunity to recoup some of that overpaid sales tax. And then again, on the go forward. If you're currently under audit or you have no support, both of those, I mean, if you're currently under audit, you're already at the audit risk stage. If you have no support and you're claiming this exemption though, the auditors are very aggressive in this area without that support. You have the obligation as a business to support those exemptions you're claiming. I'm currently assisting a client right now that's a manufacturer, specifically in Minnesota, and they were claiming an 80% exemption. What that equated to was the auditor, and they have no support at this point. What that meant in dollars was $85,000 of tax that the auditor was adjusting for those back 3.5 years in Minnesota that was being audited. So then I was contacted. I came in, I'm in the middle of the study right now. I've done the field work already, and we're just crunching through the numbers on the backside to be able to provide the support and an exemption number that makes sense. So it's highly scrutinized when we're in the middle of an audit. It's not as easy as just showing that auditor when they show up, like, hey, here's my support. Here's why I have this number on my exemption list. But we're still there and we can still get there. So if you have no support, but you're currently taking an exemption, you definitely should figure out why. A lot of times we find that it was, 20 years ago, it just happened that way. And those people that made those adjustments or that calculation, they're no longer with the company. There's no paper support. There's nothing to really show for why we're doing that currently. So it is very important. The other pieces that I have seen is a facility relocates, and that exemption that they were maybe claiming at their smaller facility, they've now expanded and moved on to a bigger facility, a bigger footprint. And that exemption just carried along with them from their utility company. So that business has an obligation to say, no, here we are, we're at a bigger footprint. Here's our updated study. Here's our updated percentage. And depending on the state, that could be supporting with an exemption certificate, or they may need to see that full study. So both of those things I've seen also in practice. And it's something too that it's an investment up front to do the original study. But then as your facility expands, you can expand that study. So we don't have to start over. Let's say you put in a new line. We just need to add in another line then, or add in that additional equipment and recompute. Or if you would pull in a new shift because business is booming and you need more work, more production. So you have another shift that you've added. We would want to just calculate those numbers on your current study to support that additional shift, because obviously your manufacturing electricity or gas is going to increase when you increase your shift by 8 hours a day, or you increase your line. So those are definitely things that you want to take a look at. But again, they're additions to that original study, that original investment. So an opportunity is identified. You sent over that one utility bill. We have a discussion saying, looking backwards in your state that you're in, it looks like you could save an average of X. And going forward, I would anticipate it would be about this. That's what the proposal would look like. So you have a good idea of what the overall looks like, not just now, but also what could you recoup backwards? And what does that monthly cash flow increase look like on a go forward as well? I use averages. We'll talk about that depending on your state, depending on your industry, just for that proposal purpose. Then the fun starts. We do a site visit, we come out. Basically, what that site visit entails is capturing all the items using electricity, from your huge manufacturing machinery, those huge motors, all the way down to the exit signs or the computer monitors. Maybe those aren't your biggest draw. For sure, they are not your biggest draw of electricity, but they complete the picture. They complete the study. Because ultimately what I'm doing with my study and where I saw the holes as an auditor, I do 100% review of everything that's pulling in electricity. Let's just use as the example. Gas is a similar model. I match it to your utility bills in a summer and a winter month. So we're taking account into that AC usage or the HVAC usage and just seasonality as a whole. We're matching 2 separate months to the kilowatts on your utility bill, because that way it allows for less scrutiny, less room for error. And then if the auditor or if the state comes in and does want to question it, we're questioning maybe a piece of machinery on merits of, is it manufacturing or not? Does it qualify under the state statute of what manufacturing is? Instead of just saying, let's say you did just an indirect method, which would mean you're taking into account all of your electricity for your light bulbs and maybe a refrigerator in your break room and some HVAC. If you just take that percentage and that comes up to 20% and you subtract that out saying, hey, I'm 80% manufacturing, that leaves that 80% subject to scrutiny and subject to question by the department, because we're not giving them all of the data to support that manufacturing usage. The states want to see that. They're a little more strict than they used to be, I would say, just as a whole, because they don't like giving money away. They don't like not getting those sales tax dollars in. But if the statute supports this exemption, by all means, you should be taking it as an eligible business in this area. So that's that compilation of data based on the state law. And then once we come up with that exempt percentage, we would go back and help you either file that refund claim directly with the utility company to recoup or get a credit on your next utility bills, or go back to the state, depends on what the state allows. Typically that is back that 3 to 4 years. And then also we'll get that exemption submitted to the utility company. So on a go forward basis, you're recognizing that every month. Let's give you some real examples so you can understand how this plays in. And because I didn't tell you, I'm in Wisconsin. I was a Wisconsin auditor. Probably could have guessed that. I may still be in Wisconsin. And the first example is a cheese factory, because Wisconsin. The example that I just went through with this cheese factory is they were paying $60,000 a month on their electricity usage. That's what each invoice showed, $60,000 a month. Of that, in 1 year, $40,000 was equated to the sales tax on those utility bills. They were paying 100% sales tax when I started this review. Upon completing the study, a 95% exemption was computed. What does that mean in real dollars? It was a refund back 4 years of $145,000 plus interest. And from that $40,000 a year they were paying in sales tax on their electricity, they're now paying $2,000 a year. That's $38,000 back into their business that they were spending on sales tax that they didn't need to be. So that's a real example. Quickly kind of converting over to one more cheese factory example, and then I have some other ones, I promise. I did another cheese factory that had multiple smaller locations scattered throughout the state. And in some of that, they had an older building converted that was, I'm going to call it a cold storage warehouse. However, that cheese was aging in this warehouse. So it was multiple floors. The HVAC units were running at whatever temperature was necessary based on the cheese specifications. And that cold storage warehouse was allowed a 98% exemption. The rest of their factories, based on the computations and based on what was happening at them, ranged between 64 and 89%. So there's definitely a range. It's not just a simple cookie cutter, every manufacturing company is X percentage, but that's where that study comes into play, and you have that support to prove it on the back end. I was in Michigan as an example and kind of showing some different state laws and how they differ. I was called in to do auto For the auto industry, there was a heat treat facility. Well, I was in July in Michigan, and I'm in this heat treat facility, which uses high gas usage. It was so hot in there, I think I melted a little bit. So there's definitely an argument to say when you're running that much gas usage in July, that it's not going to be equated to heating your facility, because you certainly are not heating your facility in July in Michigan. So those are the hurdles we have to get over, though, as we're discussing these things with the state. That was a huge opportunity there with that heat treat facility, the gas side. But then also Michigan is a lot more generous than, let's say, maybe Wisconsin, in that they allow the lighting in your manufacturing area. So we got to also take advantage of the exemption on the light bulbs over the manufacturing footprint of the facility. We had to do the differentiation between the offices and what was truly manufacturing. But again, that's where it goes down to, it varies by state. And then just as a few more specific to the ag industry, currently I'm working with a sugar beet piler machine in Minnesota. It's not your typical manufacturing operation. It's a beet piler machine that's running the beets through and putting them onto piles for additional storage and I guess freezing throughout the winter season prior to being able to bring them into production. And that sugar beet piler out in the field qualifies for this manufacturing exemption, or the ag exemption specific to Minnesota. Because it's part of processing, it fits the law, it fits the definition. It's seasonal, so it's a little bit different in how we do the computation, but we adjust accordingly. And the only non-manufacturing usage on that particular site was their yard lights. They had a separate meter specific to their scale house. So they ended up with a 98% exemption because of how they're set up and how that's used. Paper mill can go up to 99% exemption, because think of all the energy being used there versus maybe the lights in the facility or the office space. And then another real quick example would be grain drying operations. They also qualify either under ag or under manufacturing, or kind of a combination of both. Just depends on the state and where it best fits. We have to be careful with grain drying and with really any manufacturing operation. The key is to understanding the scope of your business and the actual process itself. So specific to, let's stick with the grain drying. The harvest comes in, we're drying the grain. Let's say it moves over to another silo waiting, and we're going to mill it on that same site. That entire process, once the grain gets put into the dryer, that's the start of our process, possibly the auger into it, all the way through to the end after it's been milled. We need to, though, define those lines as far as where does it start being storage, because now it's outside the scope of manufacturing in most states. So it's just important that we're identifying not only all of the items that are pulling in the electricity or the gas, but we also have to help work through that scope of what does your process look like, and really understand and define, here's where we're looking for the qualifiers. Outside we're not, and then that's how we make that adjustment as well. And then real quick, going back to some of the states, I just wanted to touch on where I mentioned some states only allow that you have to get over 50% and you end up getting that entire exemption. Utah would be one of those. We have to prove, and we still need to do the study to support that exempt percentage. But if we're over 50%, you're going to be eligible to get 100% exemption on your sales tax, or of your electricity bill, 100% exemption of the sales tax. Those are big dollars, and they also can come into play in planning. Maybe you're expanding, or maybe you're relocating, or a new startup or a new division. Maybe there's some planning opportunities there in how we're wiring things. And maybe we'd want to match up that manufacturing equipment with some of the non-manufacturing to maximize this exemption. Those are the fun planning opportunities that can come into play as well. So it's not just, I've been operating and I've done it wrong and let's go try to recoup. There's opportunity any step of the way, from planning all the way through now. We've been operating this way for 50 years. Help us find this exemption, help us put this money back into our business. So that is sales and use tax utility exemptions in a nutshell, specific to manufacturing and ag.